There's taking a look at one of the stocks on my watch list today. It's Rackspace, symbol RAX. Now here is the daily chart, and as you can see, it is forming a bear flag. See how after earnings it ripped higher on short covering like a lot of other stocks, and then it continued to move higher, but the volume kept declining, and then it pulled back, and now it's forming this bear flag right here. It's not going away much from this. It's basically just consolidating in tight bear flag, and it seems like today's candle might be showing that it's about to break down and head south. To give you better technical picture, here is the 15-minute chart of this stock. So see how earlier in the week it was rising all the way up to 21, and then it sold off and then it sold off again yesterday on heavy volume, could not continue to move higher, and now right here it is basically just holding around this 20 line, and it's starting to take another leg down right here intraday, or might be heading south. So once again, here is the daily chart. Now last week I mentioned, if I go to my activity tracker in Open Order Pro, this was on March 17, this was last week, we saw one large bear roll puts, 4,500 contracts from March 21 puts that were sold to close for 65 cents credit, and equal amount of puts were bought in April 1st weekly 20.5 strike for $1, which is next week. April 1st is next week. To show that in the chart, let's go here. This is Rackspace, and right here is next week. So here's the open interest in April 1st weekly 20.5 strike puts. That bear is still quietly sitting over here. They paid $1 for it, and it hasn't moved much. The bid and ask right now is 85 cents to $1.05, and right here is that bear flag that I was showing. And this bear is basically looking for a breakdown next week, and possibly go all the way down, especially if the overall market continues to act weak. Where this one is what always tends to be one of the weakest links. This will probably go further. You can see today it's already moving down a little bit by just a 0.5%, and once again here is the 15-minute chart. Now to quickly discuss some of the fundamental views, right here is my note from March 10 that I discussed in the chat room. As you can see, this is when we were discussing those March 21 put buyers that showed up that later on rolled the puts to April 1 weekly strike. So prior to earnings on February 19, the company had guided fiscal year 2016 EPS of $1.02. After February 19, they cut that EPS outlook to 93 cents. They had previously guided total revenues for this year of $2 or 2.23 billion, and they cut that by 100 million to 2.12 billion. So the guidance the guidance was cut right here, but the market did not care at the time because of high short interest and went up. Now here is what I want to show. If you go to the short interest report, notice how the short interest always tends to be very elevated. It's currently at around 9.5% right now. Back in January it was around 11 million shares. It dipped in February to 8.9 million shares, and then it jumped again, but immediately to 10.4 million. So basically there was a small short covering back in February, just when things were starting to come off from overly oversold conditions, but then they came right back on March 31st, which is the latest reading we have. We're showing that the short interest basically started to come right back in, and now it's rising again. Now it's 10.4 million. Here's another look. This is on the fundamental side from Bank of America. What it's basically showing right here is an interesting relationship. This orange line is all your cloud stocks, and this is all non-cloud stocks. And basically what you will see here is that the cloud stocks continue to see multiple compression non-stop. I mean, this thing has been going on for a long time, and while the cloud stock or non-cloud stock, the tech companies actually have not seen anything. They have been relatively stable the entire time, going back, in fact, last 4 years or 5 years or something. So the entire deterioration when it comes to multiple compression, it's actually essentially taking place in the cloud stocks, and Rackspace is a cloud stock, and it's one of the weakest links. Here's another look in the same. These are the SaaS plays. and basically it's a combined view of a lot of companies that are listed over here. Majority of them are cloud stocks, and it goes to show how this entire sector continues to see multiple compression. I mean, let's be realistic. Tableau Software Data, which I'm long, is also part of this group. So that's one view. Another view comes in right here. This is from this morning, and it comes from RBC Capital. Now, this came in actually yesterday. A bunch of analysts were meeting Rackspace management yesterday, and here they came back with their thoughts and basically covering how Rackspace and Amazon AWS basically stack together. And the only point here that I feel, that I want to make is that it's always about, when it comes to Rackspace, it's always about erosion of pricing power. When they cut guidance the last time, right here, going back to my previous note, when they cut the guidance on February 19, right here, it wasn't essentially because the volume was essentially falling or the customers are fleeing or something. It's always about the price cuts, because this company is constantly facing the headwinds from Google, Amazon, Microsoft, everybody cutting prices all the time of their cloud. That's exactly what they're discussing right here in RBC Capital note again. Although RBC Capital is making a cautiously bullish comment here, saying that they see a little bit of a buffer, built-in buffer against minor price cuts in Amazon platform. I'm not sure if I want to believe that story, that if it's only going to be minor price cuts. I think it's been going on for several years now, since 2013, since I've been following the story, and I think we'll continue to see that going forward. So we have earnings that were cut in on February 19. We have short interest climbing back again after dipping back in February. We have a meeting with the Amazon, with Rackspace management yesterday, where basically the questions are rising about price cuts again. We have a chart that is forming a bear flag, and we have a large bull that rolled puts out last week and is sitting right here, which are next week's in the money 20.5 strike puts. And I think so. If you wanna trade this, these are in the money puts. They already carry a high delta of 0.62, with stock currently in 19.97. So these puts are going for $1. Let's call it about 95 cents, which is closer to the offer. So these puts are already about 55 cents roughly in the money. So it will not. The point is, it's not going to take much to move these puts. I mean, if the stock goes 2 to 3% down, these puts are going to be basically up 50% or more in a rather quickly. And so so that's what I'm looking at. Keep an eye on the stock. If it starts to really break down here, and I'm looking at more short-term 15-minute chart over here. If I start to see this crack lower through 1980 or something, I might jump into these puts immediately just to capture the daily move, maybe an intraday move, capture some 20, 30, 40% gain quickly, and then just go away. Separately, I want to mention Amazon just quickly. Here is Amazon daily chart. Now it's funny because how things just work. They were selling this sharply late last week when the news was coming out that Apple was transitioning all of its cloud content over to Google. So Google was starting to break out. I discussed that in my video, and Amazon was basically heading south. Now Amazon is coming up to a very interesting level. It is really defying the gravity pull. It's actually doing quite well, and right here it's coming up to technical resistance. And it looks like it wants to break out and run. I mean, if you notice over here, again, every time when a stock, this is my big thing, you have to know this, every time when a stock comes up to technical resistance on rising volume behind it, I always get excited about this, and that's what's happening. So you see this hammer reversal right here. It came on the back of very high volume, and now the volume since then has been very light, partly because tomorrow is Good Friday. But as it's trying to break out here on relatively high volume prior to this week, I think it wants to break out and probably wants to run maybe back up to 620 or 630. We had some bullish activity in this recently, so if I go to my activity tracker, I recorded this right here. This was on March 22, so basically today is March 24th, so this was 2 days ago. I mentioned when the stock was at 550, they were selling April 520 puts. They sold 3,000 of these, and they sold them for 450 credit, and they used the proceeds to buy 3,000 April 575 600 call spread. funny how this thing works, because the stock was right here around 550 when this was taking place, and they were selling 520 puts down here, and they were buying 575 600 call spread. And here you go, that particular call spread, April 575 600 call spread, is now already in the money. So these guys were right on the money. They were making they perfectly timed this trade. But I think if it breaks out over here, you're gonna get a lot of momentum traders excited on Twitter and elsewhere that can continue to push this higher. And if I'm looking at my chart, this right here, this level is also major volume over price resistance level. So as you can see, so if it breaks out here, there's going to be minor resistance. Again, look over here, these are my volume over price resistance. So if it breaks out here, this has no major resistance, probably, let's say, until here, which is 608 609. So you're still looking at $20 to $30 to upside. So right here, 608 609 is your some resistance, minor resistance coming in, looking at the volume over price resistance lines. And then if it can continue to grind higher from here, it may be on its way all the way to 624. The biggest of all resistance will not come into play all the way up until here, 655. So I think there's an easy shot probably in this, if it breaks out, to make $20 to $25 to upside. Let's call it all the way up to 608 610. So that's what's on my radar. MACD has room to run, RSI has room to run, nothing is overbought yet. And just to quickly show you, in Rackspace, MACD is actually selling off, it's rolling over, and RSI is also forming a bear flag along with the stock. So two very divergent views. And so one is bearish, one is bullish. Keep an eye on both of these stocks next week. That's it.